So always remember assets and expenses. Why I am writing them together? Because both have similar kind of treatment. And then we have income, liabilities, and equity. Right? So expenses and income, expenses and assets, whenever they increase, they always are recorded on the debit side of the account. Whenever assets and expenses they are increasing, we record on the debit side of the account. And what do you mean by the debit side of the account? I will tell you later. But for the time being, you need to learn this rule. Then, whenever they decrease, they are recorded on the credit side of the account. So whenever assets and liability expenses are increased, they are recorded on the debit side of the account. And whenever they are decreased, okay. But for income, liability, and capital, it is reverse. So whenever they decrease, they are recorded on the debit side. And whenever they are increased, they are recorded in the credit. You can write this somewhere, huh?
You will give us printout.
I will give you printout. Yeah. But you will need to write as well. I will give you the printout. But just when you write something, so you will learn something, right? I will also share it in the group. I can't share it. Okay, no problem. So I'll give you the printout, right? Okay. Joanne,
Yes.
so are these rules clear?
Yes, yes.
Do you know these rules before?
Huh?
Did you know this rule before?
No, just now.
Okay, so we have 5 elements of financial statement: asset, expenses, income, liabilities, and equity. So regarding assets and expenses, we have the same rules.
Okay.
So whenever assets and expenses they are increased, we record on the debit side of the account. I will tell you that what do I mean to record on the debit side of the account. But so far, you need to understand that whenever they are increased, they are recorded on the debit side of the account, and wherever they decrease, they are recorded on the credit side of the account.
Yeah. Okay.
And regarding income, liabilities, and equity, whenever they decrease, they are recorded on the debit side of the account, and whenever they are increased, they are recorded on the credit side of the account. So these rules are very, very important for the bookkeeping point of view, right?
Yeah.
Okay. Now, always remember, whenever we have any transaction is, an event that happens in the business. So you as an accountant, you need to record that event in your book of accounts. Okay. So we need to ask a few questions from ourselves as an accountant. So let's suppose there is a transaction that the owner, now you consider yourself as an accountant. Okay, so let's suppose Elaf. Elaf is the accountant of Icon Trading Center. Okay, so Olaf, you consider yourself as an accountant of the business. Now, how would you think? Let me show you. Let's suppose there is a transition in an event. So there is an event one. Let's suppose event one. The owner of the business invested cash $10,000. This is the event. Now the owner of Icon Trading Center invested $10,000 as cash. So what do you mean by invested $10,000 cash? It means that he has provided you $10,000. You are the accountant of the business. Okay, so because you are the bookkeeper, so he has provided you 10,000. He says that this is my money for the business. Okay, so there are three questions you need to ask to yourself for bookkeeping. Question number one. Okay, let me write it like this: Q1, Q2, Q3. You have to ask from yourself these three questions. So the first question is, how many elements of financial statements are there? This is the first question. The second question is, what movement these elements are having? This is the second question. And the third question is, how shall I apply debit and credit rule? So these are the questions you should ask from yourself. And the answer of these is always from this table. Okay. Now the first question is, you ask from yourself. Yes, Ella. The first question you have to ask from yourself: how many elements of the financial statements are there in this transaction? How many elements you find in this transaction? The owner of the business invested cash $10,000. How many elements you find here? 1, 2, 3, 4, 5. Out of these 5, how many elements you find?
Investing cash only, investing.
Okay, now the first thing, you have cash,
Yes.
right? So if you remember, we recognized cash as our asset. Yes, we have to, absolutely right. Yes, for me, there are 2 elements. You are absolutely right. So the first thing, how many elements are there? 2. So you have to recognize the first element as cash. Okay, and that is basically asset. So this is the first thing you recognize. Is this clear? So we have cash as an asset. Okay, second element is it expense? Is it income? Liability, equity? Equity, yes, absolutely right. So we have another response from the meme. Wow. For me, did you know these basics before? If no, then you are doing an amazing job. If yes, still you are doing an amazing job. Okay. Yes, only the basics. Yeah. Okay, perfect. So the second thing is equity. You are absolutely right, because you are talking about honor investment. So we call it capital or investment, right? So this is the second element. Absolutely. And now this is the first question we have already discussed. Okay. How many elements are there? Two. The first is cash that belongs to assets family. The second is capital that belongs to equity family. Now you have now question number two. What movements these elements have? Okay, cash, is it increasing or decreasing? Increasing because your owner is giving you cash. So you as an accountant of the business, so your asset cash will increase. So you will also highlight this. And what about equity? Increase, decrease? Increase, it also increase. Because with investment of the owner is also increasing. So how shall you apply debit credit rule? Cash asset will become debit and capital equity will become credit. Yes, Joan,
Yes.
where are you?
Here in my room.
So, did you learn this concept? Very simple.
Yes, yes.
So the first question is that how many elements of financial statements are there? So we said there are two, assets and equity. Because the first one is cash that belongs to asset. The second one is investment that belongs to equity. Now the second question, what movement they are having? So your cash is also increasing and your capital is also increasing.
Okay.
So, and how you will apply debit credit rule? The cash will be debited and your capital will be credited. That is how you will apply it. Okay. So I mean simultaneously I should also uh, is there any question? If there is any question, do let me know, please. Please ask any question freely. Any. Any question.
Nothing.
Nothing.
Yeah, yeah.
Everything is crystal clear now.
Yes.
Wow, you guys are amazing. Okay, because I need to provide you notes at the same time. So I should be okay. Now we have another transaction. And the next transaction is event two. Okay. Now the event two says the business purchased building for $6,000. So you purchase building for $6,000. Again, these three questions you need to ask from yourself. And again, we have the same table which we need to analyze. Yes or no? Ella or Ola?
Yeah.
Yes. Yes, brother. So the business purchased building for $6,000. So just analyze this transaction. I just take what comments. We can discuss with you. We discuss with the union. Yes, so how many elements do we have? 1, 2.
And maybe
Hmm?
6.
How many elements? So we have 2 assets. Madam. 2 assets. Wow. One is non-current asset, another one is
Correct.
current assets. You are absolutely right. So we can say this. I mean, here we do not have any income expense equity. Okay. Or can we extend it like this? I mean, can we put like this? Okay. So here we can write non-current assets, right? Then we can write current assets. Wow. Brother, you are absolutely right, right? Okay. Then we put expense here. So expense, they are always current because we take it during 1 year. So we can write here during 1 year also, during 1 year, right? And regarding income, so we can also, so whenever income is decreased, debit, and when increase, credit. So again during 1 year. Okay. Regarding liabilities, we have non-current liabilities, and then we have current liabilities, right? And finally, we have equity. So all these 3 have the similar rule, and that rule is this. So for this, okay. Now you can understand it better, right? So in this transaction, we have non-current asset, which is called building. Am I right? And then we have current asset, which is called cash. So your building, it is increasing or decreasing? Building, you are purchasing it. So it is increasing. So when your building increase, it is debited, and your cash decrease, it will be credited. So one aspect has to be debited, other one has to be credited. Joan, for me, everything is fine.
Yeah, it's clear.
Very clear. Alhamdulillah. Alhamdulillah. Wow. So let me put on the notes because shukr alhamdulillah. So Sadaqallah ya Rasul. What happened? What happened? It is not to be. Okay. It's a landscape, no? Right, brother? So now we have event 3. And let's suppose it says that the business purchased office equipment $2,000. Okay. Now again, these three questions you need to ask, right? And we have this with us. Yes, brother. How would you analyze it? The first question is how many elements you have, and the other question is that what movement these elements are having, and how shall I adapt it to? Okay, the business purchases office equipment $2,000. Yes, actually, office equipment is current asset or non-current asset? Sorry, non, yes, absolutely right. So we put office equipment here, right? And cash is here. So office equipment is your non-current asset, and it is increasing, so it will be debited. And your cash is your current asset, it is decreasing and it is credited, right? Wow. Learning?
Yes. Absolutely.
Wow. Okay. So now, let's suppose we have another transaction, event 4. Debit and credit. Event 4. The business took loan from CBQ $5,000. Yes. John, how many? Now you have to ask these three questions from yourself and you have to answer it, okay?
Okay.
Yeah. The first question is how many elements of financial statements are there?
2. Bank loan and cash.
Wow. Bank loan and cash. So bank loan is what? Current
Bank
liability,
loan
not
is
CBQ, right? CBQ. It's non-current liability. And your cash is current liability. Am I right?
yeah.
Perfect. So now you need to tell me that what about their movement?
What movement these elements are having. So for cash,
Mhm.
your cash increase, right?
Cash increase, amazing. Cash increase, so it will be debited.
And
And
then
what about,
your credit increase.
yeah, wow, mashallah, amazing. Perfect. So now we have event 4. Sorry, event 5. Now the business, all of you will do it, okay? The business purchase goods for resale purpose, $3,000 on credit. Okay. Now, the first thing is, now they are purchasing what? Goods. Goods are purchased for resale purpose. This is for sure. Goods are purchased for resale purpose. So, is it, I mean, what do you think? Which element is this? No, first of all, you have to recognize which element is this. Yes. How many elements you find in this transaction? Just try it. So it is you're purchasing goods for resale purpose, 3,000 on credit. On credit mean? No, you are not paying cash. So it will be your current liability. Right? So we write here trade payables. Trade payables. Okay. So trade payables will become your current liability. And it is also increasing. So it will be credited because your payables are now increasing. You have to pay them. You need to settle them. And on the other hand, you are purchasing goods for what purpose? For resale purpose. So it is your expense. It is your decrease in economic benefit because you are purchasing it. So it is your decrease in economic